Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Online trading platform Grow lists at a 12% premium on Dalal Street. Market capitalization hits 80,000 crores on the very first day.
The second day of PhysicsWallah's initial public offering saw subscription at 12%. As of 4 p.m., employees and retail investors led the subscription, followed by non-institutional investors. The company plans to raise 3,480 crore rupees via a fresh share sale, along with an offer for sale component.
Men's grooming brand, the Bombay Shaving Company, has raised 136 crore rupees in a combination of primary and secondary infusions. The round was led by 6 Sense Ventures with participation from the firm's founder, Patni Family Office and others. The fresh funds will be used to expand its omni-channel presence, invest in capabilities and strengthen its brand.
HRS Navigation, a medtech company, has raised $5 million in a pre-Series A funding round backed by GVFL, Phisys Capital, Satguru Catalyzers, India Exim Bank and Kitven. Funds raised will be used to accelerate product innovation, global market expansion, enabling HRS to scale manufacturing and advance next-generation navigation.
Nebius Group has signed a deal worth about $3 billion with Meta to provide the Facebook owner with AI infrastructure over a 5-year period, the company said after it reported a more than 4-fold rise in third-quarter revenue. It is Nebius' second contract with a hyperscaler following its $17.4 billion deal with Microsoft in September.
Those were the headlines that we're tracking for you this evening. But on what's brewing today, online trading platform Grow made a blockbuster debut, listing at a 12% premium over the issue price. The company's 6,600 crore rupee IPO had received a good response, with the issue being subscribed over 17 times. The subscription was largely led by institutional investors. The stock ended the day with gains of 30%, capturing a market cap of nearly 80,000 crore rupees.
The listing of Grow represents much more than a financial milestone. It's a reflection of how far a clear vision, strong governance, and relentless focus on customer first can take a young company in less than a decade. From its inception, Grow has stood for one powerful idea, that investing should be simple, transparent, and accessible for every Indian. This idea resonated deeply with millions across the country, and today Grow stands as a trusted brand in digital investing.
Also on what's brewing, full-stack fulfillment and supply chain tech startup Quickshift has raised 22 crore rupees in a pre-Series A round led by Atomic Capital with participation from Axelor Ventures and other marquee investors. The company plans to use the fresh funds to strengthen its AI-led fulfillment platform, expand operations across key markets in North and South India, and power the omni-channel ambitions of the new age and enterprise brands. Joining me now to talk about this milestone and Quickshift's next phase of growth is Anshul Goenka, founder and CEO of Quickshift. Anshul, welcome to Startup Street. Now, Quickshift is a plug-and-play, full-stack fulfillment platform. What exactly does that mean for a D2C or SMB brand trying to go omni-channel today? And with multiple sale channels from marketplaces to quick commerce, how are brands really rethinking fulfillment and how is Quickshift enabling them to stay agile?
For a brand, Quickshift is like having an on-demand fulfillment engine that connects every sales channel. Today, a brand could be selling on various marketplaces, D2C website or quick commerce, and we sort of enable one integrated platform to be able to manage everything. So in the back end, we sort of manage a range of fulfillment centers that are scattered around the country where a brand can store the inventory. And we manage the order processing till the time it reaches the end customer. So brands can scale instantly without really investing in the infrastructure, network, or the technology, because we sort of give that all under one platform. So in short, we make omni-channel fulfillment frictionless and future-ready.
Okay. I believe, Anshul, the fresh funds will be used to build an AI-first fulfillment platform. What will this next phase of tech evolution look like for Quickshift? How are you using AI to simplify complex operations and decision-making for brands?
So the next phase at Quickshift is built on AI-led intelligence. So for example, brands, first of all, they have to plan a lot of inventory. I mean, for a brand to be really successful, they have to have inventory on shelves, and that goes right from the time they manufacture the product. So how much to manufacture, where it has to be placed, where it has to be stocked. We collect a lot of data, and we sort of are building a platform that really simplifies decision making for brands. So turning fulfillment rather than it is known as a cost center and focusing towards a growth center. And data is going to enable all of that, which we have collected and built over the course of years.
All right. Quickshift, Anshul, has already clocked 100% ARR growth over the past year. Your core business grew 50%, while newer programs scaled by over 100%. So what are these new programs and what role do they play in the next phase of your growth?
So if you look at, I think from a customer's perspective, everybody's expecting 10 minutes as the demand, right? I mean, you and me, when we order, we expect the products to reach at within 10 minutes. So what we've done is we've moved on from 1 day, same day delivery to about 10 minutes delivery, and faster fulfillment, better fill rates, and ability for the brands to really sell on marketplaces such as Zepto, Blinkit, Swiggy. We've enabled programs post-listing for them. So it becomes absolutely easy for the brands, no matter whichever channels that they're selling on, to be able to, leverage Quickshift as the go-to fulfillment partner. So some of these channels which enables quick commerce and faster deliveries have been the scale-up programs for us. Additionally, we have programs which enables international shipping for some homegrown brands, which make the products globally available. So I think these two products and solutions which we've developed over the course of 1 year has sort of scaled up really well within us.
Sure. You're currently serving over 100 enterprise and D2C brands, handling 3 lakh B2C shipments and 7 lakh marketplace orders a month. You're now expanding into NCR, Bangalore, Kolkata, and more. What's driving your expansion strategy, Anshul?
Expansion is driven by demand. Brands want to be closer to the market, reduce delivery times, optimize costs. So by building regional fulfillment centers, we enable same-day delivery, 8-hour delivery. So each new location strengthens our nationwide fulfillment dream and the grid, and keeps the brand competitive across every channel. They've got to be present everywhere on the shelves, wherever the customers need, whenever the customers need. So that's the goal.
Sure, but fulfillment is a crowded space, from logistics majors to newer tech players. How does Quickshift differentiate itself in terms of technology, customer experience, or scale?
So through technology, of course, through our AI-led platform that gives, builds a lot of predictability, gives a lot of visibility, helps brand really take some informed decisions. Second is the customer experience with 99% accuracy rates that we've been able to achieve via our fulfillment network. That's been one of the best differentiators for any brand. A few players in the space have been able to really scale up, and we believe that the ability that we give to a brand to be able to scale from 10 orders to doing about 1 lakh orders, that's what sort of sets us apart from other competitors.
Sure. Anshul, you also aim to accelerate global e-commerce shipping for Indian SMBs. How significant is that opportunity, and what infrastructure or partnerships will you need to unlock it?
So it's a massive opportunity. Just imagine a seller based out of Surat, he's able to sell in markets such as US, UK, Canada, Australia. So we are building a cross-border fulfillment capability within Quickshift, and we are partnering with international 3PLs that offer end-to-end visibility and access to markets. And our goal is to be able to make made-in-India products available and globally deliverable within the shortest span of time. So products that, let's say is being ordered by a customer in the US, we have the ability to be able to fulfill it within the next 3-4 days, as opposed to people waiting for 15 odd days.
Okay. One last question before I let you go. What is your vision for Quickshift over the next 2-3 years? Are we going to see a more tech-driven logistics platform or a global fulfillment network emerging from India?
So we are building India's most intelligent fulfillment network, where AI, automation, and data, the network, everything works together. The vision is twofold: that we want to become a tech-first platform, and with the domestic and the cross-border pieces emerging from it. Essentially, we are essentially transforming fulfillment from a back-end process to a competitive advantage that every brand could possibly leverage.
All right. On that note, it's time for me to wrap up our conversation. Anshul, many thanks for joining us on Startup Street, and wish you the very best.
Thank you. Thank you so much.
And moving on, AI meets sustainability. That's the vision driving Greenfi, the Kerala-based startup transforming how banks and enterprises manage ESG risk. The company has raised $2 million in seed funding led by Transition VC with participation from global banking executives. Founded in 2023 by Varun Chandran, Greenfi uses AI-powered tools to automate ESG due diligence, compliance and reporting, helping institutions cut costs and improve transparency. The new funds will help expand global operations, strengthen AI research and scale partnerships as Greenfi positions itself at the forefront of climate tech and sustainable finance. Joining me now to discuss this further is Varun Chandran, the founder of Greenfi. Varun, thank you so much for taking time out and being here with us on Startup Street. You know, you have built a platform at the intersection of AI and sustainability, right? So how exactly does Greenfi use AI to simplify ESG compliance for banks and enterprises? If you could sort of take us through what's on offer.
Sure, happy to be here. Thanks for having me. Imagine when you go to a bank for a credit line or for a loan, you give your KYC, your bank statement, and your business plan. The bank takes all of this and they run a quick credit check on the borrower. Besides that, they also run a series of risk assessments such as your potential exposure to anti-money laundering, fraud, financial crime, CFT, cyber, etc. And in the given scenario of the current environmental, social, and governance-related policies evolving around the world, now the banks are also running the risk assessments on ESG. Now, in doing so, in performing so, it takes about anywhere from 2 weeks to a couple of months to assess the potential risk exposure of a borrower or an investment opportunity on environmental, social, and governance-related matters. Banks retain a number of resources in some cases where our customers have 21, 25 people sitting in each country to assess this risk by navigating through 10 to 15 different systems, different data points. And this takes a lot of time, prone to human error, and also it's expensive. What we built is to automate this whole process so that stakeholders can focus on making decisions faster to invest in sustainable financing opportunities.
Sure, absolutely. And you know, you've raised this $2 million, right? So what does this investment mean for Greenfi's mission to make ESG risk management smarter and more scalable? And where will you be deploying these funds going forward?
Yeah, that's a great question. Thanks for asking. So we're a startup from Kerala. We're building a beautiful product, sustainability product for the world. We have very big ambitions to grow global. Half of the capital will be deployed to set up and grow our sales and marketing team in the US, in Europe, in Middle East and Southeast Asia markets. And about 40% of our investments will be on enhancing our AI capabilities on the product.
You already, sort of work with major global clients, right? From UOB in Singapore to KIIFB in India. What has, their feedback been and how has it shaped your product roadmap? Take us through how you plan to scale your client base and also new products on the anvil.
Yeah, absolutely. So we've actually, last year, we came live in February, and since then we have been working with some of the major clients that you mentioned. In fact, the feedback is very positive. We've bagged, long-term contracts from these customers that you mentioned. One signed up for a 6-year contract, another bank signed up for an 8-year contract. It's very inspiring for us because it's sort of co-innovation, joint initiatives that we are driving with our customers. It's not just a contractual obligation or an agreement that we are signing with these customers. We work with them to learn, evolve, and innovate further. So, as you rightly said, we are working with some of the international customers. With a very small team, right? We did not have a sales and marketing team yet. So now we need to take all these case studies and go to the world and tell them these feedbacks from our existing customers and win more clients. That's our plan.
Winning more clients. But, one more thing is, how will this funding sort of help you scale internationally, right? Especially in regions like California, Europe, and the Middle East. What's the plan or roadmap on that front?
Yeah, that's a good question. So first, we'll set up a local, sales offices in all these places. We are in the process of recruiting world-class talent to help us establish partnerships. So we are going to explore partnerships with consulting companies as well as ISVs, software companies that are complementary. So partnership is going to drive a lot of our revenue moving forward. We will also have local foot on the ground to be able to generate more revenue by reaching out through influencers, network, as well as direct GTM approach. So that's a plan for our growth in those countries. Yeah.
All right. And can you share where Greenfi's revenue growth currently stands at? And what targets are you aiming for over the next year?
Yeah, so we are on a 100% growth rate right now. We have around 16 customers. All of them are very happy and sharing from multiple industries, like around 8 mainstream industries, be it automotive, manufacturing, textile, fashion apparel, food and beverage, etc. So obviously, we want to take these customers along with us to create those case studies and explain that to similar companies globally.
The ESG software market is growing rapidly. So what sets Greenfi apart from other players in this emerging climate, fintech space?
Yeah, so banks are introducing sustainable financing products like such as green bonds, transition funding, green financing, etc. Right. So in order to do the deal origination, obviously they need tools like ours that is AI enabled that helps them to do the risk assessment, due diligence, reporting, monitoring, as well as compliance. So that's where we come in, and we help banks to grow their sustainable financing origination pipeline so that they can grow that business. On the other hand, we also work with large international customers, global enterprises who would have a global supply chain where they can focus on getting their supply chain more compliant towards ESG and help their supply chain increase the accessibility towards sustainable financing.
Sure. And, finally, what's next for Greenfi? Are there upcoming partnerships, innovations, or expansion plans we should watch out for in 2026?
So we have exciting plans ahead. We are primarily looking at growing our business. So we're going to go global, recruit more partners, recruit more sales and marketing team, and then work with our existing customers to take our case studies and best practices to all over the world. And then we help banks and businesses to transition to more sustainable operations, as well as increase the accessibility of sustainable financing.
All right, Barun, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Okay, thanks for having me.
Well, on that note, it's time for us to slip into a short break. But up next, Hyderabad-based Jeh Aerospace is set to bring a major shift by cutting aircraft part production timelines from 15 weeks to just 15 days. Co-founder Venkatesh Mudragalla joins us with all the key details on this development. Stay tuned.
Welcome back. You're still with us on Startup Street. India's aerospace ambitions are getting a homegrown push. Hyderabad-based Jeh Aerospace is cutting aircraft part production timelines from 15 weeks to just 15 days. The firm recently raised $11 million from Elevation Capital and even caught the attention of Indigo Ventures, which made its maiden investment in Jeh as part of its 450 crore rupee fund. At TiECon Delhi 2025, CNBC TV 18's Aishwarya Anand spoke with co-founder Venkatesh Mudragalla on what this investment means for India's precision manufacturing ecosystem. Take a look.
Venkatesh, the first question that I have for you is that Indigo Ventures has made its maiden investment in Jeh Aerospace from their 450 crore fund. So help me understand that does Indigo's involvement extend to joint product development or vendor tie-ups? And, how does this collaboration with Indigo Ventures today influence your credibility with global OEMs or tier 1 suppliers?
So maybe let me answer the second question first. I think Indigo is one of the largest airlines in the world. They have more than 65% of market share in the country. And they're also one of the largest customers with Airbus, one of the largest OEMs in the aerospace business, right? However, the investment that has come from Indigo is very, very strategic. It is just not only about myth. The connection goes very deeper. From our perspective, Indigo is a player who is most acknowledged across the world for the kind of the business that they run, the cost efficiency without reducing, compromising the quality. Those are the things that we also want to bring into our business. Beyond that, joint product development, those are things too early to talk about right now, but I'm sure there'll be something strategic going on in the future.
Okay, all right. And not just Indigo Ventures, you've also raised $11 million in your Series A round from Elevation Capital.
That's
so
right.
help me understand what is the fund deployment plan on that front? And with that round, where does your burn rate stand today? And, what's your runway with the round?
So for us, partnering with Elevation Capital is again something which we are very proud of. The money that we have raised from Elevation Capital and the other investors that we have in the round, we plan to deploy broadly in 3 things. One thing is, of course, we are expanding the facility that we have currently. We operate a 60,000 square feet facility in Hyderabad. We are planning to expand that. We are also planning to get new equipment and new machinery so that we can be ready in terms of both capability and capacity as we move forward into the future. Third and most important thing is reinvest into our digital journey.
Now, Jeh calls itself a software-defined manufacturer.
Yes.
And you're claiming to cut down manufacturing timelines from 15 weeks to 15 days. What's the secret sauce here? And how do you ensure quality control at that speed?
So there are a couple of things how we are doing it. First thing is, all of our Center of Aerospace Resilience is actually run by engineers, even the machines. So the time to change is very, very quick. There is no loop of where we identify an issue and then they go back to an engineer, take a suggestion and come back. So even the equipment are run by engineers. Second thing is, one of the critical components of manufacturing lead times is raw materials. So we stock all the standard raw materials internally, which also helps us reducing the lead time of the raw materials. Third and most important thing is, for example, if you have to do something like an NC program, which is crucial for a component manufacturing, we already have pre-programmed layers that are there. Once we get a component that we need to, we actually bring all of them together and have a almost instant program ready to do the product development. These are some of the initiatives that we have taken to reduce the lead time.
A lot of reports have suggested that Jeh has secured $100 million worth of long-term contracts with international aerospace companies.
Yes.
So could you break down the nature of these contracts? Are they primarily for precision machined parts or full assemblies? And also, which geographies today are the biggest exports markets for you, and what percentage of your revenue today comes from global versus domestic market?
So Aishwarya, from this particular context, so we are a precision machining focused company as of now. While our capabilities expand beyond that, but currently we are very focused on precision machining. So the current orders that you're talking about, the long-term contract of more than $100 million is very focused on precision machining. Our customers are located in North America. So all of the components that we make currently are exported to North America. And in terms of your last question, 100% of our revenues today come from the export market.
You've spoken about crossing 100,000 components manufactured cumulatively. So what's your current revenue run rate? And tell me, what are some of the targets that you've set for next year in terms of hitting the revenue mark, considering you're already profitable?
We were a team of a single-digit number in about 15 months ago. Today we are more than 100 people. Our current year revenues will be almost 4x the revenues that we have done last year, and we expect to grow at the same rate for the next 2 to 3 years to come.
Well, it's time to take stock of the other startup headlines. Men's grooming brand, the Bombay Shaving Company, has raised 136 crore rupees in a combination of primary and secondary infusions. The round was led by 6 Sense Ventures with participation from the firm's founder, Patni Family Office and others. The Gurugram-based company has raised a total of $51 million to date. The fresh funds will be used to expand its omni-channel presence, invest in capabilities and strengthen its brand. Now, this fundraise marks a strategic step towards consolidation as the brand prepares for a potential IPO.
IPO-bound digital payments processor Pine Labs has secured all the mandated regulatory licenses needed to offer digital payments as per RBI notification. The company has secured a payment aggregator license for offline payments, online merchant payments, and for processing cross-border payments. This makes the company the only player authorized across all 3 verticals. The company's IPO is set to make its debut on the Lal Street this week.
Moving on, the parent company of Mamaearth, Honasa Consumer, reported its consolidated net profit of 39 crore rupees for the second quarter of FY26. This comes after the company had reported a net loss of 19 crores in the same quarter last year. Further, the company's revenue from operations surged while expenses grew marginally.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.